Hey everyone, last week I had the opportunity to attend the National Multi-Housing Council's strategy conference where I met with investors from across the country. It was a great opportunity to begin putting the health crisis behind us and finally get face to face with decision makers. And they're making a lot of decisions right now. It was like a floodgate opened. Large investors flush with capital are trying to find properties to buy. Multifamily cap rates, particularly larger assets, are facing significant downward pressure. While I'm specifically referencing apartments because that's the conference I just attended, I'm hearing similar information about other property types. At the Self-Storage Association conference, they were talking about similar aggressive pressure on self-storage cap rates. I'm also hearing it in industrial, hotels, and some retail property subtypes that are seeing increasingly aggressive bid activity. The consensus among large multifamily investors was that cap rates on larger properties, generally 100 units and up, have pushed down into the 5% range in smaller markets. And we're seeing cap rates in the mid to upper 2% range in highly sought after markets like Austin, Texas. The key factors supporting rising prices are the tremendous market liquidity and still low interest rates. But there were a lot of questions about the inflation outlook and prospects of rising interest rates because higher interest rates will pinch the very thin yield spread, and that concerns many investors. The other hot topic centered on tax policy. There was a lot of conversation about the risk to the 1031 exchange and the step-up basis, which if passed could rewrite commercial real estate investment strategies. But more conversations centered on the impact of higher capital gains taxes and what they would mean for the investment climate. Most of the people I spoke with thought the top long-term capital gains tax will be adjusted to somewhere around 30%. But that was more of a consensus guess by investors. And that brings me to a very important consideration for all investors. Right now, there is tremendous commercial real estate market liquidity and interest rates are very low. There is downward pressure on the cap rates of most property types, and in several instances, cap rates are at an all-time low. The tax policy outlook still has a lot of question marks, but most believe capital gains tax rates will go up. So any investor who is considering the sale of a property in the next 3 years, whether to exchange into a new asset or to take some chips off the table, should start that process now. At the very least, I recommend getting a broker opinion of value to help calibrate the local market climate and to get an estimate of what your net proceeds would be. Then consider how much the value of the asset will need to increase in order to offset higher taxes. Many investors will find that selling now is a much better option than holding for 1 or 2 more years, particularly if they believe capital gains taxes and interest rates are likely to rise. As I say every week, investors need to keep their eyes on the horizon, and I think that always holds true. But right now the market is in flux. I can't tell you how many seasoned investors said they've never seen a market like the one we're in today. So, investors should consider both offensive and defensive strategies for each asset in their portfolio. Consider the value of each property and whether capital allocations are optimized to maximize returns over the planned hold period. It's important to do that now, while market liquidity and pricing pressure is particularly strong. Consider how your capital allocations will be impacted by interest rate movements, rising inflation, and prospective tax law changes. Then you should nail down your game plan. With so many factors affecting commercial real estate in play right now, the range of opportunities is particularly striking. Consider new markets and out-of-favor property types to balance your portfolio. The market could shift quickly, so opportunities may not stay in play for long. Hopefully you can capitalize on what I believe will be a relatively short-term window of opportunity, then once again, fix your eyes on the horizon.